Hi, Assalamualaikum and good evening. My name is Fakru Azri and we are from Group 7 and now we will present about income tax.
Hi, my name is Shahrul Ghazwan, ID KA22066 from Grade 7. Me and my friend represent this topic, which is income tax. So this is the outline of the presentation, which will be presented by me and my groups. So first is we will introduce the income of tax, and next objective and outcome of the topic. Define the definition and description based on the topic, and simple equation or calculation of income tax, and lastly conclusion. So let's move on.
Okay, next is objective. First of all is understanding the taxation system. Discover the basic principles and structure of income tax systems. Second is learn how to follow tax laws and regulations. Third is gain awareness of ethical consideration in tax planning and reporting. After that is outcome. First of all is ability to plan finances strategically in order to minimize tax liability. Second is ability to conduct financial analysis for engineering projects. Third is skills to estimate and control costs throughout the project lifecycle. Lastly is optimize resource allocation by considering tax factors in engineering projects.
Assalamualaikum and greeting to everyone. My name is AHMAD TIRMIZI, EL22025, representing Group 7, and I would like to share with you guys about the actual definition of income tax. So firstly, what is income tax? Individuals and businesses must pay certain amount of money to the government. These payments are mandatory and everyone should be contribute. The government use this money to fund public services, infrastructure and other essential things that benefit everyone. Secondly, tax can influence the choice managers make when deciding where to invest money. In simple terms, tax affect how much money a company has and can influence the decision its leader make about investment. It also affect the investors' decision to make an investment into any company. Whenever investors look at a company, they check how much money the company makes after paying tax. This helps them see if the company is doing well financially. If a company manages its tax wisely, it can have more money to grow or give to investors. Before we continue this decision, we should know that how the tax are imposed and how much tax affect the economic analysis techniques. There are a few types of it. Income tax is the money the government collects from what you earn. The income tax base is the total income used to calculate your tax. It includes earnings from jobs, businesses, rent and investments. Higher incomes usually have higher tax rates. Deduction and credits can lower your taxable income. Understand your country's rules to report and pay tax accurately. Also, sales tax is a government levy on the purchase price of goods or services. The sales tax base is the total cost of the item or service that is used to calculate the tax. It's a percentage of the purchase price that consumers pay as an additional amount, and it varies depends on the applicable tax rate in a specific region. Lastly, property tax is a tax imposed by the government on the value of real estate or property owned by individuals or entities. The property tax base is determined by the assessed value of the property, and the tax amount is calculated based on this value. Property tax are typically used to fund local services and infrastructure. Business expenditure are divided into capital expenditure and operating expenditure. Capital expenditure are significant long-term investment in assets such as buildings and equipment. These expenditure are expected to provide long-term benefits. Operating expenditure, on the other hand, include day-to-day expenses such as salaries, rent, and utilize. These occur on a regular basis and are usually short-term costs to maintain businesses' operation.
Taxable income of business firms. The starting point in computing a firm's taxable income is gross income. All ordinary and necessary expenses to conduct the business, except capital expenditures, are deducted from gross income. Capital expenditures may not be deducted from gross income, except for land. Business capital expenditures are allowed on a period-by-period basis through depreciation or depletion charge. For business firms, taxable income is computed as follows: taxable income equals to gross income. Because of the treatment of capital expenditure for tax purpose, the taxable income of a firm may be quite different from the actual cash flow. So here's the example of taxable income. So this is the solution. The cash flow for each year would suggest that year 1 was the poor one, which is 0, while years 2 and 3 were very profitable. A closer look reveals that the firm cash flow were adversely affected in year 1 by the purchase of special tooling. Since the special tooling has a 3-year useful life, it is a capital expenditure which, with its cost allocate over the useful life. If we assume that straight-line depreciation applies with no salvage value, we use equation 11.2 to find the annual charge, which is B minus S over N equals to 60 minus 0 over 3 equals to 20 million. By applying equation 12.2, we write taxable income equals to 200 minus 140 minus 20 equals to 40 million. So in each of the 3 years, the taxable income is 40 million.
Assalamualaikum. My name is Ahmad Fahmi. So for the example equation and calculation of income tax. The French Chemical Corporation was formed to produce household bleach. The firm bought land for $222,000, had two $900,000 factory building erected, and installed $650,000 worth of chemicals. For the A, what is the first year depreciation charge? So we calculate for the first year depreciation for the equipment, which is we got $92,885. Second, we calculate for the first year depreciation building, and we get $16,371. And we calculate for the total first year mass depreciation, and we get the 109 to $109,259. For the question B is what is the first year taxable income? So taxable income is a gross income minus all expenditures except capital expenditures minus with depreciation and depletion charge. So we got $240,744. For the question C is how much will the corporation pay in the federal income tax for the year? So we get $77,140.
For the next question, a medium-sized profitable corporation may buy a $15,000 used pickup truck for use by the shipping and receiving department. During the truck's 5-year useful life, it is estimated the firm will save $4,000 per year after all the costs of owning and operating the truck have been paid. The truck salvage value is estimated at $4,500. For the first question, what is the before tax rate of return? First, we must to compute the before tax cash flow. So this is the table of cash flow in 5 years. And then we try to use formula IRRBT. And then we try I equal to 50%. And substitute to the equation and we get 15,645. Since I is slightly low, so we try I equal to 18%, and then we get 14,475. Then we use IRRBT formula, 15% plus 3% multiply 0.55, and we get 16.7%. For the second question, what is the after-tax rate of return on this capital expenditure? Assume straight line depreciation. First, we use straight line depreciation formula, B minus S over N, and we get $2,100 per year. And then to solve the after-tax cash flow, we must to find the after-tax rate of return. So we use IRR80 formula. We try I equal to 10% and substitute to the equation, and we get 15,509. And I is still low, so we try I equal to 12%, substitute to the equation, and we get 14,644. And lastly, we use formula IRR80, and then we get 11.2%, and this is the value of the after-tax rate of return.
And last but not least is conclusion. Income tax play a crucial role in engineering economic, shaping decision-making processes and influencing the financial viability of projects. Failure to consider income tax implication can lead to inaccurate appraisal and suboptimal investment choice. Income tax is a significant factor that engineers must consider when making engineering economic decisions. By comprehending its impact on cash flow and employing appropriate analysis technique, engineers can make more informed decisions about project and investment. And that's all from us. Thank you.